Good evening, everybody, and welcome to Live Market Analysis. Another time here on a Monday evening. It's a pleasure to be with you as we delve into markets and really ask the big question: what should be in our portfolios right now? What shouldn't? I guess just as importantly. Before we answer those questions, let us discuss the disclaimer, which says that everything we are going to talk about tonight is information. It's general in nature. It has not taken into account personal financial circumstances, objectives, or particular needs. So before acting upon that information, you should consider those things very carefully, or if you need help on that, seek advice from a financial professional. Always remember that trading and investing is risky. Markets go up, markets go down. They might not go the way you wanted them to. You could lose money as a result. It's always important to remember that it's you and not me who's responsible for the stuff you do with that money. Apart from that, very straightforward tonight. You ask the questions about stuff you're interested in the markets. Could be anything to do with stocks, bonds, indices, crypto, commodities, anything I can get a chart on. I'll give you a TA reader. Or anything about trading, anything to do with the 3 M's, we call them: methodology, money management, and mindset. Let us kick off tonight's proceedings by heading over to the Amy Broker screen, where I have the Nasdaq chart. We look at this, the Russell 2000 and the ASX 200 to determine our portfolio management. So how much of our capital that we can have invested at any one point in time, and we generally we are moving in or moving out of the market in thirds. Okay, so this is not individual positions. This is overall capital, and it's risk-based, it's volatility-based. We want to be fully invested when the market is trending strongly. We want to be not fully invested when it's not. The markets are trending strongly. That's good news. Pretty sure the last time we had this discussion, we said much the same thing. Full risk position. If you're not quite there, certainly you can move there. If you're there, well, then you've got to really think about what you've got and maybe prune some of the dead wood before you can add further risk. So FRP on the Nasdaq, there's nothing in the Russell to push me off that position at this point in time. I don't know the future, so tomorrow we could get an almighty big black candle, long upward pointing shadow, huge volume signal as well, and it might change our thoughts and processes. Obviously, if we start to make lower peaks, I'm concerned about that. Again, with similar sorts of candles. If we close beneath a short-term uptrend ribbon, I'm worried about that. If we close beneath a long-term uptrend ribbon, then the trend is probably over. I'm just letting you know the things that you need to look out for if these things happen before we catch up next time. FRP in the US, bringing it back closer to home. FRP here as well. There's absolutely nothing in that chart that tells me we shouldn't be that way. I'm just going to fix up these. As you know, if you watched or looked at my evening wrap tonight, I did the US indices. I didn't do the Aussie one. I'll do that tomorrow. But really, half the course here. It's very much bull market oriented, very much demand side oriented. More demand side candles than supply side candles. Price actions to rising peaks and rising troughs. Trend ribbons all heading in the right direction. Hey, we're not exactly setting the world on fire. Clearly, there's a bit of supply lurking in around. You can see that upper shadow there, that upper shadow there, that upper shadow there. But it's a process. It's always a process of ebbing away, wearing down that supply. And if there is demand in the system, excess demand remaining in the system, then prices will rise. It's the most basic tenet of economics, FRP here also. Now we tend to have a look around the grounds, as we say, to see if there's anything that would push us off that base thesis of full risk position. Starting with European markets, I can't see it here either. So the French market doesn't look great, of course. Short-term downtrend, long-term downtrend, falling peaks, falling troughs. Predominance, I'd say, still of supply side candles. But we're not trading the French market. Hey, if you are, for some reason, I shouldn't assume, but if you are, well, then your risk position here is going to be very, very different. You would be at your minimum risk position, which would be a maximum of 1/3 invested in the market. And of that third, you're probably going to be mainly skewed towards the short side. The good news is that's not us. The DAX is fine. This one certainly reinforces everything we've said. Are there any ticking time bombs in global finance? And I don't think there are in Europe, at least. Heading over to Asia. Not great here at all, but again, nothing that's going to push me off my position. We saw the Hang Seng there, the Nikkei, very flat, the Nifty 50 over there. In India, no big deal. Oh, that's encouraging. So this is much like the DAX. It's not a deal breaker or a deal maker, but it's certainly encouraging. We're seeing some animal spirits there in China coming back in. Obviously big rally, consolidation, maybe pushing back up. The A50 shares, they're not doing much, are they? So not too excited there. Obviously, we looked at that one, but looking at the sector indices there, if you're sort of wondering maybe where within the Australian market you might want to be invested, certainly big tick on the consumer discretionary. Energy still really flat to nothing, equilibrium at best, but more probably a long-term downtrend in play there. Financials still look fine. I'm seeing maybe some of those bank charts just flattening out a little bit, maybe early stages topping pattern, but not going to jump the gun just yet. But just keep an eye on those. You know what to look for. Gold, I've said to you this last week, or I really said it sort of after this big decline, that I think the gold story is a little bit done for now. I'm happy to be proven wrong. I think, big white candle closing 9,200 near the high, that would prove me wrong. It would set it up for another attempt at the high, but it's more and more feeling, it just looked at Friday's candle really, it's more and more feeling that at best we're equilibrium, and at worst we're probably early stages here of turning that long-term trend. So watch out for that one. Healthcare, flat equilibrium. Technology still very good, no complaints there. That's the other tech sector. Materials, equilibrium at best, but a bit like energy, probably a downward trend. That's resources, much the same. Property, okay. Staples, equilibrium at best. Telecommunications, yes, still quite good. And utilities, probably equilibrium. So a pretty narrow market, actually. And if you've been following along with my ChartWatch daily scans that I do, well, you've probably seen there's actually very few long trades out there, which is totally at odds with what we should be seeing. I mentioned it in a tweet, just letting you know I'm concerned, officially I'm concerned, that we aren't seeing just an abundance of long opportunities, yet I'm still seeing a bunch of short trades out there. It shouldn't be the case. Not trying to instill any fear into anybody. I've said full risk position, and something I'm monitoring. I'll let you know if it gets worse. Looking at the line charts here for aluminium, very flat, no big deal. Copper, we were monitoring this developing long-term downtrend that I do think now is in place. Excuse me. Iron ore, I just need to make one little change here, get rid of the percentage sign because that screws things up on AMI Broker. Hit enter. Not doing anything at all really, is it? And then nickel still looking pretty horrible. Lead, equilibrium. Tin has broken down. That's disappointing. And zinc still looks fine. In terms of the lithium, key lithium markets here, let us go back to the candles. And yeah, I think we're still equilibrium here at best, at worst, still in a long-term downtrend. This is the seasonal rally, perhaps, of 2024 between here and here. So looking at volumes today, they're really back down again, aren't they? So maybe that is run and done. Let us head over to the trading view screen now, and we'll just finish off our whip around the grounds with a look at some of those other commodity futures, starting off with silver there, holding the long-term uptrend ribbon, but looking a bit dicey. This candle here is the big problem, I feel, and we just haven't had enough of a response to it to remove my concern. Okay, or reduce my concern that we are rolling over here. Needs to get above 32.15 pretty quickly, or we could be in some trouble. I've told you my thoughts on gold, and here's the decisive candle for me. So that's nothing. I wouldn't flinch at that, because if we think about what happened before that, the trend was fantastic. That got my attention. These are neither here nor there, and then that's kind of the confirmation that we're in a bit of trouble, and then that's the confirmation that we're in even more trouble. As long as we continue to trade beneath that peak there, because we've had a contract update, I need to move all of these around. It is an official pain in the backside, but this is what I'll do to maintain my charts. And you can see I've got back adjusted set here down here, and that means that when the futures contract rolls over, the prices will change, and that's part and parcel of technical analysis on commodity futures. So it's perfectly normal. And a lot of people get really concerned. They say, Carl, that peak that was at 2,880 cents, aren't you, isn't that important, or shouldn't you be looking at that? And the answer is no, completely ignore it. It doesn't exist, and it doesn't matter anymore. You can see that. I'm just going through the process here of changing. So I actually go through and change all my labels as well for my charts. But I'm not going to do that now, but I am going to show you how tedious sometimes it can be. And just to make the point that, in fact, I didn't even hit the right value there. Make the point that if you are following along at home, then you would go through this process as well. And that's it. The new numbers are the new numbers. That's all you need to know. Forget the old ones. Get it out of your mind. The point I was going to make is as long as we're beneath 27.48.20 on the front month contract, I'm concerned about gold. Copper looks pretty lousy. Iron ore, we obviously looked on the other chart. Actually, that started to look half decent now. I'm not going to get too excited, but maybe trying to turn at least the short-term trend. Uranium is just hovering sideways. It went back down to those lows. Natural gas is just respecting the long-term uptrend ribbon. And Brent crude oil is as flat as you can possibly get. The coals are still trending lower, flattening out at best. So, look, there's nothing really decisive there. There's nothing where you'd go, let's go investigate that theme in the stock market, or let's go trade it on a CFD or a futures contract. So, let us keep moving for that reason, and we're going to head over to the bond market to finish us off tonight, and we'll start off with the US longer duration bonds. And we can see through the course of last week, so that these 1, 2, 3. It won't be because of Thanksgiving, will it? So it's probably the last 3 candles there, isn't it? 26, 27, 28. Whatever. You get the picture. Over the course of last week, yields came down. That's where I'm going with this, and quite significantly now over the last few weeks here, from over 4.5 into sort of 4.3. It's better than a full interest rate cut from the Federal Reserve, and that's what's helping the stock market. So there's almost a perfect negative correlation between here and the S&P 500 or the Nasdaq. Looking at the shorter yields, they're coming off as well, so that's fine. Aussie 10s, they've come off even more, and Aussie 2. So it's all good here. There's nothing that worries me. Again, we're looking for red flags, and I'm not seeing them. What would worry me here? Shooting back up to those highs. The market won't like that. You'll see stocks come down, guaranteed. Falling very sharply, precipitous falls back to 360. Something really bad has happened in terms of something global growth related. Huge tariffs, bigger than expected tariffs, I should say, have been slapped on, or something geopolitical, which we hope doesn't happen, and that would get us down there. And neither of those would be too good for stocks either. So the best case scenario here is sideways, or a very, very gradual decline. So that nothing's wrong, but rates are just coming down, rate expectations coming down. That would be a good thing. I think that's it. I don't think we need to do any more. Let's head over to the Amy Broker screen again, and I'll kick off with our online requests starting on the Aussie market. Let me get back to my default Zoom, which is that one there, and we're going to commence with Davis, who has KCAY, which is Canyon Resources. Last time we looked at it would have been on that candle where I wrote FRP. Always say I can't tell the future, so I didn't know the candles that were going to come next. They're not shocking candles, to be honest. I mean, that's 50-50, that's 50-50. These are actually demand-side candles. Really only today's candle that's anything to worry about. And if we look at the order of magnitude of those 4 candles, or 5, 1, 2, 3, 4, 5 candles, it's a pretty mild decline compared to the rally. So I'm not too fussed about it. This is a key demand candle here, and obviously this one here. So, if we're starting to close beneath here, and it's going to be say 16.5 or worse, or here sort of 15 or worse, then I'm more concerned. But I don't think we need to do too much about it just now. I mean, we've seen at times where it can do this. It doesn't strike me as the most sort of liquid company. So we can expect these things to happen on these types of stocks. Hopefully we get a demand side candle, and then what that will do for us, it'll take you the levels that you're really sort of watching and concerned about. You can kind of take that and then sort of push it up to there if we get the demand side candle, and that would be handy, because obviously you're now de-risking the position because there's less between your entry point and getting out. But unfortunately that is just the way things go. I mean, we look at, for example, I wrote FRP plus 1/3 there. I happened to write it there as well. We're going to have these situations. So, yes, it's a black candle. Within the context of things, I don't think we need to do a lot just yet. I should, in my summary, put that back to here, because I think that's where you're going to do something. And until then, full risk position. So happy to write that. Obviously, not looking to add a third, because that last candle doesn't warrant it. Let's go to Mick. Mick's got SKS, and Mick is also considering a minus 1/3 here, and probably pretty similar. The only thing that is different between this one and the last one is that the current candle, which is identical. I mean, what a segue between the first and second stocks we're doing tonight, is that this is a confirmation candle really of this. So by that I mean this is confirming this. If I go back to CAY, as I said, none of these are supply side candles in themselves. So this is the first supply signal. So I'm not jumping at it. Whereas if we go to SKS, this is the second supply signal. But at the same time, it's like the other one. I don't think it's terrible. If you were going to act, and as Mick says, minus 1/3 question mark. And I think that's where we're at. And given it is confirming the other one, and there is a trough. There actually is a trough here. There's a little trough here, and you might say, well, why is that a trough, Carl? Why is there? Why do you point that out as a trough and not somewhere else? Because if we look at, we've actually got two technically, and so the definition of the trough is the lowest point between the short-term downtrend on its left and the short-term uptrend on its right. And the way we get our short-term trends is just literally looking at the highs, the relative highs and lows. And anybody can do this. If you can hover over a bar, you can get the details for that bar. Mine are over here on Amy Broker. On TradingView, they're on a different window. But lower highs and lower lows is a short-term downtrend, and then higher highs and higher lows is a short-term uptrend. And the trough is simply the lowest point between those two trends. Think of a valley in the mountains. It must be the case. The lowest point between two peaks must be the bottom of the valley. There's no other way to interpret it. And just checking here, if you look at that low, it's at 196 on that candle for the 26th of November, and that day there was 195. So we've got higher lows, and we can easily see higher highs. So therefore, this low here, we actually would say is a trough, or we call them points of demand as well. It's a relevant point of demand for us. And let's put him over there, and this one also, because we have lower highs and lower lows, and then we actually have higher highs here. If you don't believe me, that high there, 203 on the 28th of November, and this one here was 202.5 for what it's worth. So technically, we've got a couple of little points of demand in here, and they're not really, well, technically they're different, but they're the same, aren't they? When you think about it, it's the same demand that's behaving to push the price back up. It didn't push it up very far in relation to the shadow. That shadow's the first strike, lack of the rally. This candle's disturbing, closing beneath the points of demand. So for me, minus 1/3. And I'm just comparing and contrasting the first one where I said FRP, we need some more information, and this one where I think, well, now we need to act. Where do we need to act next? Well, we're looking for the next point of demand. And this one here, if we close beneath that one there, it also takes us beneath our short-term trend ribbon. So I think we can do that, and you can do more or less. It's up to you. This is I'm just telling you what I would do, and you decide what you want to do. But I think we would move on a close beneath there. Close less than would be a zero risk position. So we're going to get rid of the final 2/3, and the reason why we're doing 2/3 is because we've got two reasons to do so. We're closing beneath the short-term trend ribbon, and we're closing beneath another point of demand. Okay. If you said, Carl, I prefer to do 2 here because I don't like the candle, I don't like the confirmation, I don't like the points of demand, I've got enough reasons to do 2/3 there. Fine, knock yourself out. But I think a minimum of a third here, and then where's that zero risk position beneath that? And if that's the case, that's the trade for now. We'll look at it another time. We don't want to be, the equivalent would be about here, wouldn't it? Sort of about there, or maybe even there. Do you really, even though probably all the way through here it's about the price you would have got out, or maybe slightly better, do you really want to be stuck in all this time? And some people say, fine, Carl, that doesn't bother me. I'm happy to hang on until we get beneath the long-term uptrend ribbon and ride those big swings. Other people say, look, I want to be on the next one and the next one. I can always come back here and look at it on that day. And I bet you on that day it was in my chart watch scans, no doubt about it. let's keep moving. Hopefully instructional for you there. Let's go to Solvar, which is actually, I think, a really interesting setup at the moment. I'm pretty sure I put it in here. I don't think I've put it in prior to that unless all the way back here. Okay, and to be honest, if you got out of it between here and here, no complaints. You probably break even, tiny loss, but just to save time, you really, if you're getting out here and getting in there and getting out there and you're getting back in here, I don't think it's a big deal. It's just, but that's my style. I don't like to be stuck. I like to keep moving. I don't know when I'm going to get the next PME or Telex, and I want to have capital available to add to them. So really all I'm saying is giving you a history of when it probably would have met my criteria, and probably there and there. Certainly here I know I ran it. And tomorrow when you open up the chart watch scans, it's going to be a featured chart tomorrow as well. So that tells you what I think about it. A little bit of background why. Well, certainly we are a turnaround setup here. So of my 3 setups, this one is a turnaround setup. That can be no question about that, because we have obviously a changing long-term trend. Okay, we have a short-term uptrend. We are in higher peaks and higher troughs, so we've got good price action. We've got a predominance of white candles, so demand side candles, and yeah, we're breaking through a point of supply. We're probably also breaking through that point of supply. There's a nice base pattern there. Probably the only thing we're really lacking here is some really huge volume, but it's not that terrible either, to be honest. So I can't find any reason why we wouldn't be. FRP plus 1/3 on this one. In fact, you're probably adding your second third, if anything. Let's go to FFM, which Mick says he's only got 2/3. He's already out a third, but he's losing his patience on the rest of it. I can see why, and I can see why you're frustrated as well, because in this candle it looks pretty darn good, and that's at the end of October. And I think a lot of the stocks we had in this space, us all collectively, were looking pretty good at the end of October. And then we had this little issue of the Donald Trump red sweep, and that kind of killed base metals, it killed gold, and it killed a bunch of good trades. And we can whinge about it, but at the end of the day, if you were surprised by the enormity of that win, so were the markets. And then things change, and you kind of have to get with the program, don't you? Otherwise, you risk being stuck in. Let's get rid of those because we don't need them. That was ironically the last time we said FRP, but holding 2/3, I think, at that time. I wager we would have added that final third at some stage. Mick, what could you have done here? Where were the signals? And look, that's that big initial signal we talked about on an SKS. I'd say that's probably the confirmation of it. And dare I say, you actually have a little trough in here as well. So it's a very similar pattern. There's a little trough, so you go lower highs, lower lows. You can go check this out as your homework. And there's a little high here. And whilst that's a lower high, we eventually get the higher high. So this is still the lowest point between the short-term downtrend, that's clear, and the eventual short-term uptrend. So the rule is very clearly displayed here. And then you get that full black candle confirming this one breaking through the trough. So for me, that's a minimum of a third. I'm guessing, Mick, that's probably what you did. And then it's, well, how do I feel about the rest of it? That candle there is disturbing because look where it started. I mean, it's a big dip. I know it's white, but it's not a good candle. Upper shadow as well. But I think if you let that one go, I wouldn't complain, and you'd let that one go. Here is where I kind of can't let it go anymore because we're deep in the shadow. We're closing beneath the short-term trend ribbon. We're beneath this demand-side candle, and all that other stuff has happened. So for me, that's the day where I sell. I actually can't give you any more room on that third, and probably on this day here, I think done and dusted, and frustrated that I didn't get out more aggressively between you and me. And annoyed that I let what was probably a decent profit go begging, and then probably kicking myself a little bit on this candle here, but not getting back in because we talk often that we don't just take any white candle after this supply side push. This supply side push is significant. Lower peaks, lower troughs, predominance of white, black candles. We need to see at least half of that damage undone. So, closing above the balance point, high peaks, high troughs, nice candles. It didn't get there, and then we're coming back down again. And if you kept holding sort of through here, if you didn't do that one, then I think somewhere in those two, you're definitely all out. I can't see any reason to be in this one right now, Mick. That's just me. I know you've started to get out. You might not have either interpreted some of those signals like I've just interpreted them, or you just didn't want to. But for me, I'm ZRP on this one. And you know what? Where it goes next that's up to fate, isn't it? We're just going to keep moving. Peter's got B4P. Well, okay, good. I feel better now because with three stocks that have done well in terms of trends, and then maybe not as good as we would have liked. But this one seems to be kicking on, and that's wonderful as well. If you got it, you might. I bet you there's a few people listening. Well, I got the first three, Carl. I don't have this one. Thanks, mate. But yes, there's not a lot more I need to do here, but put FRP plus 1/3 there. We're not near any round numbers. I'm not particularly concerned about 150. I'm more concerned about 2, but that's a long way away. Price action looks good, doesn't it? Candles pretty good. Can't complain about those, and the trends look impeccable. So if I can't find a reason to sell it, and if there is every reason to buy it, why wouldn't you? Volume today, astronomical. So very happy with that one, Peter. VUL. That's not it. Coming up, VUL. Look, this is another disappointing one as well. I put out a tweet on that day and I said, hey, look, I don't know where the top's going to be, but I'm happy to buy here because I don't know where the top's going to be. All I can see is a signal, and a few people tweeted back, well, it's the top. Oh, it's going down. That's it, mate. Look, whatever. Kind of missed the point that I put it in around it as a feature chart about 12 times between here and there. Where's the exit? Because we know there's an exit here. I think that's a big issue there, especially after that sort of a pullback. And then this one here. Look, and I think Peter in his note said he's 2/3 out from memory, or he's out, I can't recall in the email. So Peter's obviously been taking some money off the table, doing the right thing. 1/3, look, I think it's probably 2/3 here. No, well, it's not. It's a third and then a third. So let me just say plus 1/3 risk position is probably the smarter way to go about it, and it's not letting me do it for whatever reason. So let's go plus 1/3 RP, and I think that explains where I'm at on this one. If you wanted to hold that final third until beneath here because you've got some affinity with Vulcan, you're a true believer, God bless you, go for it. But probably more inclined just to move on again with this one. So just the way it works. And P&I is the final one here, which needs to be on watch. I don't like this candle. Yep, so I don't like that one. A decent volume in there as well. Definitely a price action, volume, and volatility signal. So you're starting to see the three sort of tent pegs of my methodology. You could say relative strength comparative is a fourth one. But there's the price action. There's volatility. So that's why I use an ATR of 1. I'm sure many of you are wondering, what the hell is an ATR 1? When I put an ATR on my screen, Carl, it's 14. That's the default. Wells Wilder, who came up with this originally, he used a 14. Why using a 1? Because I'm not interested in Wells Wilder's methodology or usage of this particular concept. In fact, I don't even use his ATR formula. I use a custom one because I think his is inferior. I can tell you about that if you email me offline. But basically, I want to know the volatility in that bar. I'm looking at bar by bar volatility, much like I look at bar by bar volume. So I'm looking at price action, I'm looking at the volatility of that bar, and you can see clusters where there's heightened volatility, clusters where there's heightened volume, and clusters where there's bearish or supply side oriented price action. And when the three come together, often you are at a significant supply side event. And I do think that is it. It's not in terms of trend, it's just something I'm concerned about. So It's on watch. What is wonderful is today's candle. We're so lucky if you've got this, and I know many people are on this because it's been one of my most featured charts. I mean, it's like magic. And Prometheus will do this at some stage, and probably Technology on some of those other ones, which I know many of you have. We're so lucky today because guess what it's given us? It's given us that higher high and higher low, right? And what that's done for us is created this point of demand here, which is invaluable for our research. Higher high, higher low. I'm just going to remove those obviously because there's a bit of clutter and just simply write point of demand on there because that's ultimately what we're trying to define, and then draw the arrow beneath that because that's now our level. Not to, wholesale dump this. So there's some people you're probably feeling from trading my system for a while that, Carl, I think your system works really well. The signals to get in, they're usually actually pretty good. And the first signal, I just get out, mate. I just move on. But that's up to you. The risk is you're going to miss a lot of these, okay? You're going to miss a lot of these. And I'm prepared to take a few hits so that I can get a few of these because they're going to make or break your year, basically. It's a trade-off and it's very much a style issue. So I'm just letting you in on or trying to help you understand maybe what your style is. Okay, and then I'll tell you what I do. So for me, the most I would exit personally on a break through that, and it would depend on the candle. If it's a bloody awful candle, so if it's not that, but it's like that, obviously, it's going to be a different course of action. But something like that just tickles that point of demand, or closes beneath it, not just tickles it, but there's my third, long story short. Where would the next third come? I'd have to see another really bad candle. I'd have to see, something closing beneath here, but it would take a fair bit to push me out of the full position. But that would be the first place I would act, or I could act before that. So let's say we saw something really nasty in here. That doesn't break the point of demand. Okay, so point of demand, put that in the bag. We know that's minus 1/3. But what if we saw something like this, right? Or if we can maybe draw the arrow that way. What if we saw something like that in here? Okay, that didn't break the point of demand. What I'm talking about is a supply side candle that confirms what we're concerned about. Okay, that would get the third in earlier. So, which means there'd be a third up there, for example. That might be a second third, and then this might be a last third down here. I'm just trying to give you a roadmap because I'm here once a week for an hour. All right, I need you to be able to do this when I'm not around. Let's go to Rebecca, who's got ADT. Look, okay, this is we're getting some really great charts here, and I wonder if it's a function of what I said at the start, which is there should be more uptrends. There should be more. We should be inundated with buys, with wonderful looking charts, and we're not. What is with that? We are at record highs. So we've seen stocks that have had great trends, but they're starting to flatten out a little bit. And this is wonderful that we get a chance to talk about what we do with them. We're not that far away, Rebecca, to be fair. I know I'm going to sound like a broken record here, but that's a good thing. That's not a bad thing. And I think, close below that point of demand, I don't think you can really continue to run with a full risk position. And whether you wanted to do 2/3, I'll leave that up to you, and maybe you feel more comfortable with that. Just, act quickly, act decisively, and just keep some skin in the game. You're going to end up with a bunch of little shrapnel 1/3 around the place. Some of you probably already realise that. Look, I reckon 2/3 on this one, just because we're actually going to close beneath that short-term trend ribbon as well. So, look, remember what I keep saying. This is not a black box system. This is a common sense system. If you've got two reasons to get out, then get out 2/3. Okay? It's pretty simple. Let's go to, and I've always talked about the worst case scenario here, haven't I, in all of these, but okay, what happens if it starts to head back up? Well, we might get some signals to go long, a nice high candle close up around here. Well, that'd be plus 1/3. We should, for completeness, mention that. So next high close into here, that's a plus 1/3. It can go the other way as well. Let's go to Rebecca's second one, PBH. I think you've got less to be concerned with here, Rebecca. So Rebecca has told me she holds both of these trades. Obviously, you can see why she's concerned about ADT. But I don't think you need to be concerned here. I know, famous last words. That last candle's not ideal, but when you compare that last candle to some of the other supply side signals we've seen today, I think it's pretty mild. So I'm nothing else but a full risk position here. So let's just go FRP. Obviously, we're not going to add risk because of the last candle. Where would we have to do something with it, Rebecca? Again, a big supply side candle, that would concern me, but you're correct in saying it's been gradually moving up, and maybe what that does is it doesn't give us sort of the clear points of demand in close proximity. So that one's a bit of a ways away, isn't it? I mean, we're sort of one and a bit, it's all the way down sort of into the 90s. But that is the most obvious point of demand there that you'll need to keep an eye out for. And then obviously when we start to sort of interact with that short-term trend ribbon, looking for how it interacts there. Black candles in there, that's disappointing, maybe we need to be more aggressive. White candles in there, lower shadows, we're fine. Okay, last offline request for Australia at least is RHI, which is Red Hill Minerals, and Craig saying something about the black candle on the 30th. Okay, on the 30th of no, black candle is a 30-cent dividend, which maybe is that one. Maybe it's that one there. I don't know. Hold on, bear with me. Let me go. I deleted it. I do want to understand this. Sorry, it's from Craig, and it won't take me long to find Craig's original email. No, that's it. I did copy and paste it. Black candle. Craig. Bit of a mystery for me. That black candle. Which black candle? There's lots of black candles on there, mate. So if that's a dividend, it doesn't really impact the price all that much anyway, does it? And then because it pops up from there, so that's fine. Even if that is the dividend, it's fine. But if that's the dividend, look, I don't know. I can't say. Let's talk about the stuff I do know, and I can say. Okay, we've got a short-term uptrend. That's clear, and that's good. The long-term trend has actually turned back to up, and we're above it. Whether we're treating that long-term uptrend ribbon as an area of dynamic demand yet, I think it's too early to tell. So I want to see that. And if I see something like that, it's the next white candle high close, then I don't mind. Are we sort of halfway back up this damage? I don't think so. This kind of looks a bit flat to me. Like if we look at the damage that was done, we look at how much supply, how much control the supply side had compared to how much control the demand side is showing back. That's a bit concerning for me. Look, all I can say is for now, if you've got it, happy to hold it. I'm not going to add any risk to it though, that's me. So let's go FRP and leave it at that, okay? What could add risk? I'm going to go question mark here. And what I'm questioning is sort of relative control, okay? So in brackets, the supply push versus demand recovery. Let's do that. So I'm going off the screen. As to whether, if we did see, let's say we did see that demand side candle, which would look something like this. So, and absolutely it could happen. So if we saw something like this, I'm sort of asking myself, I'm asking you, would I be happy to add a third just with that question mark there? It would have to be a really good candle. So let us say if we saw an order of magnitude, what's a good candle look like? The one I've just drawn. So taking us above that peak, good full white candle. So, something like that, and that would be enough for me to go. Let's just go next high close plus 1/3. But for now, FRP only. Okay, let's head to your online requests, and let me just catch up and make sure there are no admin items, and it doesn't look like there are. So hello Avat, welcome. Adonis, hi Carl. Thoughts on Hub on the ASX? We covered it last week, but today's candle is very disturbing. Species ending. Let's have a look. Yeah, not far away from it. And look, it's wonderful. We've already talked about some of this stuff today already with P&I, haven't we? It's not as bad as P&I's one, but certainly let's have a look at. We've obviously looked at the price action. We know what that means already. But look at the. No, didn't want to do that. So they're all very delicate, very carefully set, the heights of my indicators. The volatility event, okay? No volume though, no volume event. So less concerning for me than the P&I one, but it's got my attention. So really all we're doing now, Adonis, is we're just waiting for confirmation of this. Another black candle that closed at its low. And let's say order of magnitude, half of that candle or larger, that's going to be enough for me to push out a third here. And let's go here and here and here. So something like that. Certainly closing beneath that candle's low. And we've also got a little area here as well, don't we? So yeah, look, that's the candle. I mean, that's really it. That's the picture I need to put in your mind as to what would cause me to act. And I still think it's order of magnitude of minus 1/3. There's no round numbers around here, and everything's still very, very strong, isn't it? A bigger candle than that might get me to do more. Certainly, we start to close down here. We've got issues. Looking at other demand-side candles that I think you can, if you're a bit jittery, act on a close beneath. We really shouldn't be beneath there. I mean, there's two strong demand-side pushes here. We really shouldn't close beneath there, so keep an eye on that level as well. And as I said, common sense approach. If you don't like the look of it, take some action. Let's go to, if you don't like the look of it for a good reason, take some action. Don't just get out because you don't like the look of it. Let's go to Francine, SHL. I think SHL looks really good, Francine. And I know I've been to the point of being bearish on this in the recent past, sort of through here, because it really looks like it's rolling over. I'm actually running this tonight or tomorrow as a plus 1/3. It didn't make feature chart. I just think there's a bit more that, this one's got a lot of work to do. It's got to fight really hard all the way back up. Not to say it can't do it. I like what's happening now, and I'll explain that in a second. But I'm just explaining why tomorrow, when you open up the market index article and you find it's not a feature chart, why it didn't get run that way. So I just think there's a bit of work to do, and there were other ones in that list that had far less work. There were strong setups. This is a strong setup, right? It's a turnaround setup. There were others that were probably more continuation based. I felt lower risk, making new highs, just a little bit easier. But I do want you to have a mix of turnaround setups and continuations and aggressive in your portfolio. So this is one of the better turnaround setups that I saw out there. I do feel though that SVR. I do feel that one's a stronger one. SVR is stronger than Sonic Healthcare. If you were picking between turnaround setups, and that's another reason why Solvar got the feature and Sonic didn't get the feature. So look, if you've got enough capital to do many trades today, or take on a lot more risk today just in your portfolio management model, you might well do Sonic and Solvar. If you don't, if you're picking between the two, personally, I'm leaning towards the other one and not this one. But that doesn't change the fact that I'm on record as saying FRP plus 1/3, because it's doing what we want it to do on a turnaround basis. And this candle here is the most impressive part of the equation here. So nice push up, getting us back above the long-term uptrend ribbon, but we want the dink, don't we? And I'm no doubt that you were waiting for the dink there, Francine. You got your dink, and this candle here, actually, I'm pretty sure I ran it as well on that day there. Again, it didn't make feature for all the same reasons I've discussed today, but it definitely made the main list on that day there. Okay, let's keep moving and go to SOL, which did get into my consideration. So it made my scan list, but it didn't make my short list, and I won't spend too much time on it because that's why. That's really why I didn't make it. I just want to be a bit closer there. I want to be a bit more confident with some nice demand side candles closer to that level, that there's enough oomph to get through this time. Because it's failed so many times, I think we need to give it a bit more room. That's not the right word. Not more room, but we require more of it. It needs to convince us more that it can get through this time. That's a big level. And BSL, let's have a look at that one. I'm going to go detail on the last one. There's still a fair bit here, I think, of work to do. And I'd rather find something that's, it's just got less hang-ups. It's got less emotional baggage and psychological baggage in the market for me to deal with. So I don't mind it, don't get me wrong. It's meeting all the basic criteria, isn't it? We've got a short-term uptrend. We've got a long-term uptrend. That candle's not bad. It's also not perfect either. That's a good candle in there. The price action actually, it looks like rising peaks and rising troughs. I think if I squint, even if it's not, it's not terrible. That's my point. But there's not enough there to kind of, get into an 8, 9, 10 out of 10. This is kind of, what would you rate this? A warm 6, maybe. Warm 6. Or maybe like a 5.5 or something. But we keep looking, don't we? Avant saying, hope you're doing well. I'm doing very well, Avant. I'm looking into AL3, which I think, you're definitely warranted in doing that, and A4N to build a fresh long position. I'd love to hear your thoughts. Look, it's definitely been coming up in the scans. I want to try and think the last time I put it in. Certainly I saw it here. I don't think I put it in on that shadow. I can't recall. Today, I don't think I put it in today as well. It was very close. And the only reason why I didn't make it in today is we've got a little trough in here. So lower highs, lower lows, and then we get a high. No, that's an equal high. So that's all one move. An equal low. So you can see that low there, 21.5. And we go to the next candle here, also 21.5. So that's actually not. That's all part of one move down. Yeah. So anyway, the trough is here. This is where the point of demand is. And that point of demand, ideally, there's a point of supply. If we go back 2 points of supply and find that second one, ideally, that point of demand is at or above that point of supply, and it's not. So getting a little bit marked down there, okay? But short-term trend changing, getting a little bit marked down there. This candle today is good, and because of some of this other stuff, long story short, Carl, hurry up. It didn't make the list today. I'm 99.9% certain. I'm trying to think how I can find out. Because I've deleted. Oh, I know how I can find out. I've given you the list. I've already provided you with my list for tomorrow. What am I talking about? And is it in there? And it's not. There you go. Well, there you go. Sometimes I forget how generous I am. There you go. So that, and there's the shorts. So getting back to here. No, it didn't make the list tomorrow, and I'm explaining the reasons why. Sometimes it's a fine line. I like this one, and you know what? It's very simple. I can do this very quickly. Next high close. It's literally that simple. Next high close plus 1/3. Okay, and we're not there yet. So today's candle is a step in the right direction in what is otherwise short-term uptrend, long-term trend. Candles could be better. So this one here, yes, and this one here, they concern me a bit. I need to have confidence before I put your money on the line. A4N. Oh, okay. Well, I can tell you that the last time I reckon I ran this was on this day here, and I definitely ran it as a plus 1/3 on that day, so that is horribly wrong. But I think you probably would have extricated yourself from that position quite quickly, if that's any consolation. You would have no risk right now, and you wouldn't have any based upon today's candle, nor would you have any on that candle. I'm pretty sure I did see this also, but again, decided against it, just on the basis, it's a rule. I'm not making this up as I'm going along, because I'm going to say to you, the damage that was done here, was there a lot of damage there? Yes, there was. I need to see at least half of that damage undone on the other side, but not something so simple as a 50% Fibonacci retracement. It's not that simple. I want to see price action prove itself to me. I want to see the price action recover at least in half as good a fashion. I know that's horrible grammar, as bad a fashion it was on the way down. I want to see a predominance of white candles, a flourish of white candles, at least half as impressive as these were on the way down. It's not just 50% retracement. It's undoing the damage. I don't know how to explain it any better than that in these turnaround setups. I want to see at least half the damage undone. And when you think about the logic of that, doesn't it make perfect sense? Like if it's been hit by a wall of supply, don't you want, just because my whole philosophy is about supply, demand, price, and the balance or imbalance between those three factors, isn't it? Or how the first two affect the second one. So if we've had excess supply, my philosophy is I want to see at least half X excess demand. I know that's very out there, but just what do you think? Do you think we've seen that yet? And if your answer is no, then it's not ready. Okay, what does it need? You know what it needs. It needs to put some of these in. It needs to get some nice white candles. It needs to get itself above that 50% level, whatever it is. And I'm guessing it's not far away from it. So it needs a little bit more cooking, but an interesting case study there in terms of understanding when I'm happy to get in the other side. And the good news is it'll be in one of those lists, won't it? When I feel ready. And there's that word feel. I need to get you to feel the same things I feel when I see the charts. And hopefully we're getting there. And it is probably going to take a little while of listening and doing, more importantly. This one is not bad, isn't it? But it's clearly got a bit of work to do. And, when we see something that looks like this, I think it's going to look very, very good. And until then, there's probably not a lot we need to do with it. I know, even up here I said FRP, so somebody probably asked me about it on that day, and I probably said, yes, you can hold a full risk position. Today, would I have a full risk position? Well, yeah, I think if you had it, you could hold what you've got. But I wouldn't be adding to that until we saw the next high close really, really close to what is an absolutely major point of supply up here. And then only then would we go plus 1/3 on that one. So let me take that and just put that up there for next time. That one's for Robert. Let's go to TMG, which still looks good. Had a good day yesterday and a bit of a mediocre day today, but I don't think a deal breaker. It is one of those turnaround ones. That day there, that day there, that day there. I just felt tipped that balance, tipped that balance point, and I did run it as a plus 1/3 on that day for that reason. I think today's candle is okay. So I'm happy if you've got an FRP, not adding a third on the basis of that last candle, but just sticking with what you've got for now. So I look at those three candles as, does this one warrant? So forgetting we had it before, because that's not relevant, because I think you would have been out. Any trade you would have had up here, you would have been, I reckon, completely out on that day. Right, just between you and me, zero risk position from there. So it's putting that trade behind us. I think this is the first point where we can dip a toe in the water. Okay, so plus 1/3 there, and then still happy to go to FRP at this stage, but not adding any new risk to it. Let's go to SIG, which is still fine. Isn't that wonderful? Today's candle not. Oh, actually, I just spotted something. I think I'm going to go minus 1/3 here. Not for the candle. It's very, very slightly the candle. If I'm going to say it's about 20% the candle there, but it's 80% the round number. And that's all it is. 1/3, knock it off the table, take some profit, feel pretty good about ourselves, and just watch the rest of it very carefully. We may add back that third. We're probably more likely to add back that third than we are to take another third off the table. But for me, do not pass go, do not collect $200, minus 1/3 off the table there. We've hit a round number. Okay, let's go to Sue, who's asking NWL. Now, talking about volume, volatility, price action. Okay, today's the day, isn't it? So, we've got some issues here. And what's actually, what's actually wonderful about this, not wonderful if you've got it because you've given back a little bit of profit today, but what's wonderful is we can be decisive, and that's half the battle sometimes. I think we've closed beneath that trough. Okay, you can double check it. We've got a lower peak. We have had some supply signals, so this is not the first supply signal. We've had a few, and this is really confirming that. I don't think you could do less than 2/3 here, so I'm going to go minus 2/3 on this one, and I think the final third is going to be a bit of a formality. But look, you might want to just go if you're ultra conservative, maybe beneath there. But I think I'm going to move that arrow as soon as I draw it. I think that's probably too conservative because it's probably close beneath the short-term trend ribbon is sufficient for the final third. And you know what? If it drags us back in, if it does the work and drags us back in, so be it. But minus 2/3 on the basis of that last candle. So market open tomorrow. That's how I would operate. And then if you've got another candle that closed sort of beneath that trend ribbon, the final third would come out and just give ourselves a nice pat on the back for a good trade. And let everybody else hold on in hope. If it starts to go back up, we'll look at it then. Who's got AAR, which definitely made my shortlist today. I'll prove it to you by going back to here, and that's the short stoke panic, and there it is there, AAR. And it almost made feature as well, because I love that last candle. Sorry, it's disappeared, so I'm going back here. I debated, I thought about it, it didn't quite make feature, and those are the features. I didn't have many. And now I'm looking at it, I could probably go feature. Like decent volume today, decent push, good candle. It just came down to, has it got itself over that balance point, that almost imaginary balance point in my mind, because of the severity of this decline. And if this decline was much shallower, if everything that was happening in this box happened, say, up here, then today it would have been a feature today. But it didn't. There was enough supply to knock it down quite substantially all the way back down here. The short-term trend ribbons changed as well. So there was just enough doubt in my mind. And what we're talking about here is taking it from, well, if it's in the list, don't forget, ladies and gentlemen, if it's in the list, it's officially FRP plus 1/3. That's by default. It's just whether I made it my feature today as well, which is my personal highest conviction. Yeah, I think we've got on that one. Let's go. We've done Beforepay for you, who's all as well, so that's nice. Roscoe's got Sol, which was in 5.11. I'm thinking maybe he's saying he's already in on that one. Is that right? SOL. I didn't run it. Did I run it on this day as a plus 1/3? Well, that's very brave of me. No, I didn't. Surely not. Did I? On that day? No, that's the 25th. So I didn't do it on this day. Maybe that's the 21st. 21th. That's the 21th. 5.11. What? Oh no, well, I might have put it in as a short. Yes, Ross. I probably put in as a short on that day, if anything. Yeah. Which was wrong. Well, not wrong to call it a short, but it turned out to be wrong, didn't it? But no, I didn't put it in as a long on that day. Let's go to a different Robert. It's got SDV. How are we going for time? Well, it's time to stop putting any new ones in. I can see the bottom there anyway. I did put this in, plus 1/3, FRP plus 1/3. And again, it was very close to getting a feature, but didn't quite make it. That's what I'm doing, FRP plus 1/3. Pretty self-explanatory, I think, Robert, isn't it? I love those last candles. I love the push. Where did it stop, everybody? Smack bang on the long-term uptrend ribbon with a beautiful downward pointing shadow, and up it goes again. So yeah, full risk position plus 1/3, happy enough on that one. Let's go to the answer is yes to your question, Robert. Jason's got some US ones. We're going to do those in a second. Nicola's got MYR. Hopefully you're doing well on this one, Nicola. I don't think I put it in the shortlist today. Let me check again. I did put it in as a plus 1/3 today. Okay. Now I'm thinking, oh, that upper shadow. Look, I think if you're getting in this for the first time, maybe that shadow probably keeps you out. You can see why I put it in on pedigree. Certainly FRP, there's nothing in there to suggest that we need to sell a single share. Okay, so happy holder. Are we adding risk at this stage? If that candle had closed on the high, the answer would be yes. Given it's closed a little bit off the low, it might be a couple of days away. A couple of small candles, a little bit of a dink, and then the next high close, we might well go again. But until then, happy holder, and we're not near any round numbers, and there's no price action in there to suggest sell, so we're at full risk position. On that one, let's go to Nicola asking interesting about the weekly chart. Is it a turnaround on the weekly chart? Yeah, well, it's already turned around on the weekly chart. It's actually a continuation on the weekly chart as well as the daily chart. So it's a continuation on both officially now. Let's go to Haraju thoughts on STG, which is Straker International. I like that. It's not a turnaround yet, but it's very close. Is it an aggressive trade? Look, it's closer to an aggressive than a turnaround, I think. What would make it a turnaround? Well, it's aggressive because the trend ribbon hasn't turned orange, right? So, yes, once the trend ribbon turns orange, it's going to take a few candles probably. Then it's in the realms of turnaround. And then all we need, is not a lot, is any sort of dink, okay? And then absolutely, yes, you'll probably see this come up. I don't put aggressive setups in my ChartWatch daily scans because I think they're just beyond the average reader of market index, not beyond you, but beyond the average reader of market index. So I don't put them in, just so you know. I only put continuation and turnarounds. So the only way you would see this in there is if eventually it did everything I just said. So short-term uptrend in place, little dink, showing that the long-term trend ribbon is now dynamic demand, not supply, and the ribbon has at least gone amber. They are the rules. But yes, definitely keep an eye on that one, Haraju, and we'll do your US one in a second. And literally, when I say a second, which means now, because we're going to head to the trading view screen and do our US stocks. But we're going to do that. I know it's blank. That's going to appear in a second. We're going to do some cryptocurrency first because I've got a couple of requests here from Terry for Ripple. I don't know how many of you have dipped your toe in crypto, how long you've been in the market, and if you've been in it for a few years, probably have traded crypto in the past and whether you've got back into it. That's the market cap of Ripple, but we'll get the XRPUSD in a second. And we'll go that one. And this is what's happened, hasn't it? From absolute zero, we should sort of zoom out, and we should talk about hero, and then we should talk about zero, and then we should talk about hero. And make no mistake, this stuff's gone back to zero at some stage. But it's a hero now, okay? And yes, while it's hero, we're happy to trade it. Look, FRP, not adding a third on that last candle, assuming we're on a daily chart, which we are. But everything looks fine. Next high close, happy to add risk if you're that way inclined. But I can't do anything on that last candle. I know it's a live candle, but we're about halfway through that candle now, aren't we? So let's just see a high close, and then I could go with it. Yes, it's nosebleed territory. Yes, it's a long way from the light green zone, but when this thing is running, it's going to run, and when it stops, it's going to stop. I know that sounds flippant, but that's just crypto. It's going to be a party, and then pop, right? It's going to be over. Oh, but Carl, no, it's crypto. I think if you've traded crypto for any period of time, you know what I'm saying is true. It's going to happen. USD, Stellar is the second one. A few blasts from the past here when I was more active in crypto. Look, again, not bad. Not as good as Ripple. Today's candle is still live, but you know you'd want to be up here closing close to 60 or just above before you'd have another crack at that one. So interesting. Probably FRPs on both. I think Ripple looks better than Stellar, but both okay to look at. You know, I think let's address the elephant in the room, which is Bitcoin. I told you last time I haven't sold any of my Bitcoin at this stage. I think 100 is a little bit inevitable, so I want to see the candles above 100. But I want to let go. I want to let some go in this next move. I just don't want to have a full risk position after that move through 100 has occurred. I will 100% be holding a good portion of my holdings, but I just want to get a little bit out there. But I just feel that 100 is unfinished business. So that's how I'm dealing with that one, and it'll be candle based. I will see where that candle fires, and then I'll go with it. Ethereum, ETHUSD. Much the same on that one. We've obviously got some big numbers here around about 4,000. Maybe that's a date with Destiny as well. But I'm feeling the same. I'm gonna knock a bit of risk out on the next move simultaneously there, and just lock some profit in on those. Out of curiosity, what is some of the other crap I'm holding? It doesn't look half bad anymore. I've got that one. I've got this one. Yeah, they don't look half bad anymore. And ADA, I've got some of those as well. A few others that probably not worth mentioning. You know, so they're all looking pretty good. But yeah, I reckon that next Bitcoin push will help them all, and then that might punctuate a bit of a intermediate top that could last a few months for many of them. So that's strategically how I'm looking at crypto at the moment. Let's go back to the US now, and we're going to do Perry's OSIS. You don't write it off because stuff's moving, and knowing what you know, you're already equipped with the tools to have a go at that, but you're going to have to be so disciplined on your exits. Okay. This looks like crypto, doesn't it? It looks that good, but it's not. OSI Systems, wonderful chart, and I guess a great little segue from something like Ripple, where you go, well, it's a wall of excess demand. Do I get in or not? And the answer is, yeah, you probably should, and I can't fault this one. I'm just going to head to the weekly chart. I just want to double check if there's anything out the corner of my eye that I need to worry about. There isn't. It looks even better on the weekly chart. There's just big white candles. Volume's very strong. We've got supply removal. I didn't mean to go to the monthly chart, but for what it's worth, there we are. So yeah, I can't fault it at all. And then FRP plus 1/3. If you're feeling, so here's a strategy for the people that are feeling that's too far away from the light green zone, because we know at some stage it's destiny. It will 100%. I guarantee you, between now and the end of time, this is going to touch that light green zone again. So for some people that maybe feel they can't do it, I still think this is a great setup. It's a wall of excess demand. There's a reason for it. Maybe go plus 1/6, maybe $50 or $100, whatever your sleep at night factor is. Let's click save on that one. Let's go to Perry's next one, which is RCAT, which is Red Cat Holdings, which is almost a ditto on the last one. And it's a great example of why you need to think the way I just told you need to think, because on any of these candles, you could have thought they're too far from the light green zone, and then we've just added another 15%. Let's head up to the weekly chart, and that's interesting because there's something going on here, I suspect, with some sort of reconstruction or the like, because I'm not getting a chart on the weekly, so not sure why that is. So I know there's price action there. Let me take a just off. That's not doing it. I don't know. It does concern me. I want that information. I want to see it. I want to know. I want to know why. And potentially, if I turn maybe that off, does that help things? And it doesn't. And okay, well, we're getting some other stuff happening here. So I'm not sure. I'm a bit confused by that. Okay. But let's head back to the daily chart and make a call, because that's what I'm here to do. And plus 1/3 on that one, or plus 1/6 if you feel better about it. FRP plus 1/3. Interesting on that one, Perry. Maybe you've got an idea of what's going on there with the weekly price action. Looks like a bit of a glitch in the system. Let's go to DMAC, DMAC. DiaMedica Therapeutics. Perry's saying don't have an issue on his one. Okay, I must have a setting on there, Perry. I'm sure you've done the work and you've determined whether there's a point of supply from the past. Let's check this out. All good there. And I was going to say nothing to worry about. There's a little bit of a point of supply there, which can act as a point of demand in the future. We slice straight through it, so it may well be active. It's a long time ago, though, isn't it? It's over 3 years. So I'm happy to discount it on that basis. It's starting to get a bit old in the tooth. Let's go back to the daily chart and just take a close look. There's nothing here. There's nothing there that's going to stop me from doing this one. FRP plus 1/3 on that one. Look, 3 very, very strong setups. I reckon this is my favourite one out of the 3, though. Okay, I like that last candle and the base pattern. Love the base pattern, the breakout. I think that looks very interesting. So let's go save on that one. And EMBC is Perry's 4th and final, and that looks very good too. Another base pattern. I wonder, I can just see what the long-term trend movement is doing. I reckon we're going to have a little bit more in the ways of, yes. So we've got a little bit of a point of supply here, a little bit of a point of supply there. We're closer to them, than maybe some of the others. Let me go back to the daily chart and make a call. We're through 20. a huge gap. I can't fight the gap. But just be watchful around the points of supply. If you start to see some really bad candles there, at least you're going to know why, and it might help you maybe push out a bit quicker than you would have if you didn't know they were there. But otherwise, no, I can't vault that. I tried to, but I can't vault it. So FRP plus 1/3 full risk position if you've got it, plus 1/3 if you don't. Let's head back up the list. We're going to actually, Matthew snuck in with one down there with GENI. So we're going to do that one. Genius Sports. Very, very good. Quickly have a look at here. Nothing really, isn't it? I mean, up until sort of 1360s, that's miles away. So happy enough with that one. Let's go back to the daily. Make sure I've got the right zoom. All good. Look, last night's candle, Friday's candle could have been a little bit stronger. This is a major point of supply. That's probably why it wasn't stronger. Some of the supply that was here is no doubt still acting here, because some of that's the supply that's here. Not only was the supply here there because people supplied, but the second time we get there, it's been compounded by the people that were buying. Because on the way up, this was a big white candle. On the way up, this was a big white candle. So lots of demand coming in. Look at the volume, lots of volume. So a lot of people got in at that high, and then they're feeling pretty awful about it when it comes down here. So you've got the double whammy of the initial supply that caused that downturn, and the latent supply of the people stuck in it. And then you've got people that got in here, right? This is the third group. Think about this. The third group who owned it here, saw it going up here, full white candle, said, I can't get out, this is a full white candle. And then by the end of the day, and then on this candle, said, shit, I should have got out there. Well, next time it gets back up there, I'm going to front run that supply, I'm going to get out some. So there's actually three groups supplying. With that in mind, it did pretty well, didn't it? With all of that supply, there was clearly enough demand to withstand those three attacks. But it didn't close as high as I would have liked. But that doesn't mean that it can't do that this evening. So a next high close for me, plus 1/3 for risk position if you've got it. Let's go to, heading up the list to Jason here, who's got GLP. Let's go to Global Partners. And, love it. That's such a good chart. That's sheer perfection, isn't it? You know, that's exactly what I'm looking for. Yeah, what more? No more words required. Plus 1/3. There we go. 10 out of 10. Let's go to the next one, which is FUSB. Banks over there doing very well, very strong. Bit sketchy, all right? Just be a little bit careful. Looks illiquid. Doesn't mean you can't trade it. Just means it's illiquid. It's fine. No problems there. Yeah, look, a nice base pattern through here, breaking out. There's apart from the bit of sketchiness, there's nothing I don't like about it. FRP plus 1/3 looks great. Click save. Let's go to FGBI, which is first guarantee. Just be careful, because I reckon first US bank shares and first guarantee bank shares, I reckon they're going to move pretty much lockstep in the same direction. So it's going to feel like you've got two trades, but actually you've got the same trade twice. Of which of the two are better? I reckon this one's better. I reckon this one, price action's off the charts. The candles are off the charts. It's just a wall of demand, excess demand. 18-ish, nothing so sinister that it will stop us from taking this trade now. So FRP plus 1/3, but just be careful, you know, overloading in the bank sector. That you know, if something does go wrong there, you're going to get hit on a few of them at the same time. That's all. But I do think that is it for this evening. I'm pretty sure about it. If I've missed one, you can pop it in there if I've missed it, while I'm heading back over here to the PowerPoint presentation, and heading back to the disclaimer, which says that everything we have discussed tonight is general in nature. It has not taken into account any of your personal financial circumstances, objectives or needs. So consider those things carefully, or seek the help of a financial professional to determine that information's appropriateness to you. Trading and investing is risky. We saw a bunch of charts that didn't go the way I thought they were going to go today, whether it was sold Pattinson as a short trade back in early November, went straight up, or there was another one, wasn't there, in the middle there, where I had plus 1/3, and it almost immediately went straight down, and we're considering it for long again. And that's markets, unfortunately. Our goal is to get more right than we get wrong, but on the ones we get right, we're going to ride those things like crazy and make sure that our winners are far, far greater than our losers, so that overall we come out ahead. That's not officially in the disclaimer, but it should be. Apart from that, it has been an absolute pleasure chatting with you this evening. All the best for your trading and investing. Until we catch up again. Bye-bye for now.